All right, guys, welcome back to the channel. Hope you had a fantastic weekend. Today, we're looking at investors selling off, moving their money elsewhere. Plenty of signals, signs, data points showing that investors and fund managers have been selling up in droves. Some of the largest levels that we have seen in many years and in some cases in history. Hopefully, you're getting the point of what this means when it comes to the 18.6-year cycle and the likes of the wall of worry. Hit the like button, subscribe to the channel. We're going to get into that in today's video. If you are new here, thanks very much for joining us. I'll cover the macro cycle, looking at stock markets, commodities, the real estate cycle, and Bitcoin. Of course, just chuck a couple of altcoins in there as well, but predominantly the macroeconomic cycle. Links in the video description for channel sponsors, and we also have our free weekly report that will be out tomorrow. Click on that, name, email address, you know the deal there. Let's kick it off with some of the data points that I've been reviewing for you this morning. Chart 1, March FMS, that's your fund manager survey from Bank of America Global. This one here is the largest, or shows the biggest drop in US equity allocation on record. So basically, at least what this is showing, fund manager survey, is showing that the US equity allocation has had the largest drop ever. So on all of their records, basically selling out of the US, selling out of equities, selling out of tech, energy, and of course it gets less looking at this chart here. And where is that money going? They're moving it elsewhere. They're moving it to the Eurozone, to the UK, cash, staples, materials. Banks have also been doing pretty damn well. And I guess, well, at least we would expect that because of the 18.6-year cycle, with the real estate coming to a peak around about 2025, 2026 is the US real estate. You would expect that banks would also be doing pretty well because the interest rates are higher. Therefore, they are the ones lending out the money for real estate, for your properties, for your housing. Therefore, they're making some pretty good money off all of these loans as we head up into this peak, right? So that's the first piece there. March 2025 Global Fund Manager Survey, basically selling out. Now, I also want to talk about at least what I think this means to the market, because we've covered several data points of what happens towards these lows. Basically, when you get everyone selling as much as possibly, as the markets can possibly handle, what generally happens next? And I don't mean next in terms of tomorrow, and I know it might seem like that for a lot of new investors, but what happens next? Well, here's another interesting one here from Seth. Foreign domiciled US equities fund flows. It's similar here, but you can see it in a different graph, just looking at the lows highlighted. So basically, US equity fund flows, this is negative, of course. So that says -5, -10 down here. And the largest times that we've seen this, basically the outflows, are March 2020. Let me know in the comments section if you remember March 2020. Do you remember March 2023? This one here was COVID. This one here was your banking crisis. March 2025, why does it have to happen in March? You tell me in the comment section. March 2025, at this point at least, was, well, a lot of fear around Trump and tariffs and the uncertainty in the markets. Now, of course, this could go a little bit lower. We don't have confirmation yet that this is the final low. But of course, we're definitely paying very strong attention to these low prices that are forming in the market at the moment. The next one is news articles are playing up economic uncertainty. So just in a bit of a clearer chart here, you can see COVID economic policy uncertainty index. So basically, it's likely scraping what news articles are showing. And then you can see the number on the side here, basically just a reading there. COVID extreme, Trump extreme, sovereign debt crisis back in 2011, 2012, around the Eurozone, basically big crisis over there. If you remember back over 10 years, it was like, Greece was coming to an end. They were going to destroy the euro. Germany was going to basically have a whole lot of debt within Greece, and Greece was never going to be able to pay it back. That came after the GFC, you got global financial crisis, and then of course the dot-com boom, peak, bust. The terror attacks happened within the decline already. So basically, news articles, what this is suggesting at least in terms of some sort of objectivity to a subjective topic, these are playing up economic uncertainty. And we're seeing another potential peak here. Maybe we get a little bit more out of it, but it does seem like we're getting towards an end of the extremism from the news articles. Now, the AA Investor Sentiment Survey also came out end of last week, so we're updating it here. And essentially the way I look at this is these guys have basically been putting this out since 1987, so 38 years, and essentially get it wrong every single time. They are most bearish around the lows and most bullish near tops. That, of course, we need to look at it in reference to the chart itself, because obviously there are lows within other price ranges and of course tops as well. But let's just take it for the last couple of weeks. This has been absolutely crazy bearish times. The 1 year bearish high was put in just 4 weeks ago in February, so the last week of February, and then throughout March it's pretty much been trending around the same sort of percentage here: 60%, 57%, 59%, 58%. The 1 year bullish high is 52%. That happened in July around the peak. So let's take it back to July of 2024. Well, what do you know? Around a peak there. The most bullish, absolute most bullish that they could ever be. I mean, we've talked about this heaps of times on the channel, why this area here was extremely bullish, why the breakout in 2023 was extremely bullish, and then breaking through a new all-time high was also extremely bullish. At the moment, I'm not trying to call for a low here, but the probabilities are suggesting that we could be around some sort of low. Like we've seen in the past, right? June 2022, as an example, was extreme fear. That was an extreme time that seemed like the market was over and we're about to go into some sort of deep, dark recession that would last 10 years. I even heard people talking about a 10-year lost market, bear market, that sort of thing. Okay, we got a rally straight out of that point. Sure, the market did go lower, but we got higher lows form after that point, and then of course the rest is history from there. So to sort of drum that into us, it doesn't necessarily have to be that this is the exact low, but we are seeing signs that it's likely bumbling around some sort of low. Now I want to chuck a couple of extra points here on the chart to have a look at time frames. The previous drop into the Middle East conflict of October 2023, that lasted about 3 months into that low. So just to look at some of the lengths that the market could go here, we've only seen 3 weeks down so far. And if you're following your 3-bar rules, probably not a great sign that we see 3 bars down and that this is actually going to spring back up to new highs before new lows. But of course, stranger things have happened. We'll cover that in future videos. Again, if you are missing the signal itself, essentially, it is likely that we would see a bounce at this point and probably another test. Whether the test comes out at the low and stops here at around 5,500 points or tracks a bit lower, 5,400 is obviously hasn't happened yet, but we just want to see what the strength of that move into that low is. Well, it's probably likely that we're still forming a low, and that takes time based on what we've seen in the past. You got 3 months back here, you got about a month through here, another month and a half back in July, August into September, and it just doesn't happen all the time that you get these huge V-shaped recoveries. Not impossible, but I just want to look at the case of the probabilities that sometimes you do get the bounces after the extreme fear, and then we sort of track back into another low. So that's your US equities, basically getting to some extremes of these fund managers selling out. You're seeing news articles getting to the extremes of the fear in the headlines, the uncertainty. We're getting to some of the extremes with the investor sentiment survey, still tracking around 60%, but it is slowly climbing out of it, even though the price actually went lower than this period here. The next piece is a look at the S&P 500 versus gold. So in summary, what the article is showing here, 3-month rate of change spread between the S&P and gold futures plunged. So we're seeing this big differential here. Now this low here was just before the COVID collapse. So you can see COVID drew the differential back, and we're sort of hitting some extreme levels yet again, where there were significant turning points in the market. Through 2018, 2019, mostly 2018, you saw some pretty severe drawdowns in the S&P 500. So we take it back to this area here, quite uncertain. 2015, also uncertain. Doesn't look like much on the chart now, but at the time that was quite severe because of what we had seen in the market prior to that. So this suggests that if we are to see some sort of low forming here, and again, it stretches it out to a couple of months, so we could be within that first month already, then we would expect to see gold prices stall, not a collapse. Not a collapse at this point, but at least stall, and then you'd see some sort of bottoming pattern forming for the S&P 500. Remember, we're looking at weeks to months here. It's not about, tomorrow it's going up, today it's going down. I don't claim to be able to do that at all. I don't like the idea of trying to trade day to day for these particular markets. They're very much longer term for my style of trading. The Fear and Greed Index is also, well, this is for the S&P 500. It's also coming out of some lows here. Extreme fear was back on March 10th, so 2 weeks ago at 14, getting less fearful. Sure, it's still an extreme fear, but I mean, you guys can see it for yourself. The line is getting higher, higher highs, higher lows. Overview, still an extreme fear like it was last week, fear last month. But again, you're starting to get less fearful of these lower prices. On top of that, if that wasn't enough for you, we've got more being recession. So the search term for recession. Here is your peak. That came in 9th to the 15th of March. So this is the week at the low point of the market so far. Now, of course, as I've said, I'm looking at some sort of test to the 50% level around 5,800 points, maybe a touch higher, like you can see on the side here. That also lines up pretty well with the swing bottoms that it broke down from. So there's a swing low in November, another one in December, another one in January. All of these lows were just holding the market up in that last week of Feb. And then you see this week where things got really out of hand. March 3rd, so the week beginning March 3rd, snapped all of those hopes from the investors that bought up late. That's kind of like a gotcha bar. It gets them stuck in their positions, and then they all start to sell out lower, like we could see on the most fearful week when everyone is searching for recession. And I mean everyone. This was the highest reading for recession that we had seen since the low in 2022. This is through July 2022, and there was a peak in June as well. Remember, the low on the price came in October. So basically where the lower high was. So in terms of recession, we could see a lower high form here. The price chart, let's do it over here, could go a little lower, similar to what happened in 2022, but on a lesser scale. Now, you've also got extreme times for the search volume of recession when the market was basically freaking out like it did in August of 2024. So, I mean, like I said, it seems like another sign that the sellers have basically almost been entirely wiped out. And essentially, we need to see the sellers get entirely wiped out to form a base in the market. Even if there's minuscule buyers coming in, there's still more buyers than sellers if all of those sellers have been washed out. And like I went through with a few of these surveys, these indexes, these weekly reports and surveys, as I said, that just come through. Some more things on S&P and gold, and also the sentiment. You start to see that there could be a good chance that a low is forming. But of course, this is the markets. No one knows for sure. It doesn't mean that this has to be the exact low. I think you're starting to get the picture here when it comes to the market sentiment and what that means moving forward, or at least I hope you do. So gold, in terms of the price chart here, has had a bit of a pullback. It seemed like the last several weeks, people getting super excited. The volume had picked up a little bit here through the breakout, but now we're getting this pullback just to fill in that volume. Again, you can see this volume here, March on the dailies. It was climbing on lower volume than it broke out on, and the market has sold it off and just filled in that first bit of lacking volume. Now, I like to see that for the strength in the market so that you're seeing that there is actually some support coming into it, and that close on Friday was also quite good. Doesn't mean that this is the end. As I said, with this particular survey, it could just mean that it's stalling out here until there's some more buying action that comes into the market. Now, we've looked at the 18-year cycle. What does this mean for Bitcoin and cryptos? Before I get there, shout out to the channel sponsors, Bybit, I talked a lot about the Bybit card here. I've been using this, works very, very well. If you want to be able to spend your crypto and trade and do all those things that crypto do, check out the Bybit card. Have a couple of backups there. I've also got the CAST card, K-A-S-T. I'll show you that in future videos as well, but I'll leave a link to that in the video description, just so you got some options there when it comes to actually spending your stable coins, your cryptos, whatever it might be. Hopefully you've got a few profits there. And if the market goes back up, which is what we've been looking at with the traditional markets, then, well, let's take a few profits and spend that up on the cards. So speaking of cryptos, daily exchange volume has continued to, let's use the word plummet, 33 billion, 34 billion, but it is still above the previous accumulation zone back in the second half of 2024. So we haven't had a complete breakdown yet, but definitely the interest has been lacking. The buyers aren't there for the spot markets, but the price is still holding up relatively okay. Well, I should say compared to what it was in the movement out of the second half of 2024. Liquidations have also been pretty lackluster, which isn't the worst thing. We've seen quite a lot of flush out so far. The market sentiment has also climbed today, 45, so still in fear. Basically call it around neutral because it's in the middle here, but we've seen a reasonable climb over time, even though the price hasn't necessarily gone too far from that low. Now, this was the closing price that we're looking for today, a nice close on the weekly above 85,900 being the 50% level. What is it doing as I'm filming here? Basically trading right around that same price, 85,900. The idea there is that we're seeing the market attempt the 50% level again after last week's test and fail, but the higher low formed. Now, like we saw with the crypto data here, looking at the exchange volume, the liquidations, even the search terms, which I'll show you tomorrow's video. We looked at enough Google search terms here. The volume is still lacking overall. So I think the same thing will sit here for crypto. If we've seen enough of the selling, so basically the sellers just completely drying up and leaving, like we saw a couple of weeks ago when they all got a little bit annoyed in the comment section saying, it's over, I'm selling everything and I'm absolutely gone. I'm done with crypto, because obviously altcoins have been absolutely decimated. People too heavy into alts and gambling on them. Now we could find ourselves with a bit of low volume here, but as long as there are more buyers than sellers, pretty straightforward, then we're going to see the prices continue to climb. Look at Sunday, tiny volume, but there was more than the Saturday's bar, and we saw the price climb above the 50% level to test it again. And ideally, we need to get above now 87,500, which was a previous swing top. So we need to keep putting in, or Bitcoin needs to keep putting in higher highs and higher lows here. Otherwise, this starts to stall out under 50%, which is not a great sign. And then we come back to test the lows here around 79 to 76,000. Now, let me sprinkle a little bit of hopium into the mix here and have a look back at this period. So the period going back to the accumulation before the breakout to $108,000, $109,000. This period was August, September, October, and the volume did also dry up. Look at the blue line here, started to drop off, but there was still accumulation going on. So provided the lows remain higher overall, even if the volume drops off, we could still be seeing more accumulation here. So ideally, that's what happens from this point for the bulls. And I say it with half a smile, half a giggle, because it's really too early to tell. Right here, lower highs, underneath 50%, underneath the diagonal. It's doing everything that it can to at least support this price for now, but it's still on a knife's edge at this point. Now, the previous accumulation, as we looked at with that volume, there was still a fair bit of selling going on. So here is the selling, the down days, the red days. That volume was still relatively high, and it needed to do a lot of work to get back into the green. But you continue to see larger, the lows getting higher, even though the market was still trying to sell off. Every time it came down, you saw more selling coming in, but the buyer stepped in, supported that price, and we got some higher closes. So I want to chuck this onto the chart now to add, again, just a touch of hopium here And that's the same fractal looking at August or the second half of 2024 and what that could spell, what that could look like. Now, it's just a fractal. It doesn't have to follow this thing exactly. I mean, this next low that comes up, maybe it comes up slightly closer, it touches a little bit lower, but provided Bitcoin price continues to close above the 50% around this 79, worst case, the previous low of 76, even if it tests these lower prices, then we should still see some support, some accumulation coming into BTC, and it just takes some time. Now, if we want to play a little game here, looking at some of the time frames, May, June, or late May could be an area to watch for that breakout. That's just looking at it from this fractal alone. The one I'm liking the look of a little more at this stage is the time frame for the sentiment. So I've seen the sentiment draw out here to 4 months after those 3 bar signals for BTC. That was towards these tops, 1, 2, 3. Yes, this green one here, lower highs, lower lows. And that, again, slowed the market like it did back in March of 2024. 3 bars down off a significant level, which was the all-time high, basically stopped the market dead for nearly 8 months. We take a measure from the top to when it actually broke out on the election, 237 days. It's crazy to think that it's worked yet again, even though at the peaks, it was just ludicrous to say anything about the market slowing down because, well, for one, Trump was getting inaugurated. Trump released a meme coin before his inauguration. Hawk Tour memes were going ballistic. Fart coin, whatever you want, was going crazy at the time, but the price was pretty much stagnant. So basically looking forward from here, let's have a look at 5 months from the market sentiment top. That's the market sentiment top, not the BTC top. And let's see how much time it takes for people to get worn out and absolutely die off. That's going to take us to around April. So somewhere into the mix of the accumulation when it comes to the fractal of the previous move. Okay, so we're at 122 days. Still have some patience. Let's keep watching for these next few weeks. Q2 of 2025, I think, is going to be the area to watch for the signs of, is this going to actually break out, or are we going to break down and the whole game is over from that point? I'm leaning towards the former. I think it's still got some chance here because it hasn't broken down from those levels. Now, the total crypto market cap is also holding up. We saw a few more closes here above 2.7 trillion, which was above the previous top. We're closing in on the end of the month, just a week to go. And at the moment, the March close is above the previous top. So that's a good sign here. We do have 3 months down on the total crypto market cap, so not the greatest thing here. And it's not the greens that I'm looking at. Remember, it's the lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. So you've got 3 down months. This is going to be an important one for the market to at least hold and consolidate above these levels, even if it takes another month or 2 grinding time here before it can keep moving. That's going to be super, super important now moving forward for the total crypto market cap. As for ETH, still showing very weak signs here. Not able to close above 2,063. Not able to close above, of course, by default, it's not going to get to $2,150 or $2,500. So very, very slow grind. The only benefit to this is lower highs, lower lows on the weekly, lowering volume. It could just be a matter of time and it's just grinding high because Bitcoin's actually moving slightly higher than ETH. And the stable coins have also continued to grind. At least it's been grinding underneath all of the highs. Hasn't broken down from 4.7, 4.8 yet, but at least the volume is slowing down for any of these moves to the upside. So it's still very much a rock and a hard place for cryptocurrencies. Bitcoin hasn't given away its hand yet. It's still playing a pretty good poker face at this point. We need more information here. At the moment, basically trading between $79,000 and $88-ish thousand. The good news overall is that it seems like a lot of the selling has occurred. So the majority of it, doesn't mean it's everything, but the majority of the selling from this peak has occurred. Now it's a matter of a waiting game to see where this retest happens. Does it happen underneath the 5,800 points for S&P 500, which would mean it's on the weaker side and looking towards the test of 5,500 again? Or do we get a break above back into the strong half of the 50% level, back above all the previous swing lows, and it starts to consolidate above the 5,800 points. That is what I think the market is going to be looking for over the coming weeks to identify the strength or the weakness. And that, of course, is going to play out over into BTC. Like, subscribe. The report's coming out tomorrow, so that link is in the top of the video description. And of course, the Bybit debit card. Might as well go and spend something while we're waiting for these markets to do anything. I'll see you guys back in the next video. Till then, take care. Peace out.